and welcome to yet another session of CAFÉ series, which are, of course, conversations around finance and entrepreneurship, where we try to engage with professionals from academia, from industry, civil society, and government on a variety of topics at the intersection of finance, technology, and entrepreneurship. It's my proud privilege to introduce our speaker for today's CAFÉ session, Dr. Christian Catalini. I'll give a quick bio of Christian. Christian is the chief economist of the Libra Association and a co-creator of Libra. He's currently on leave from his role as associate professor at the Massachusetts Institute of Technology, or MIT, where he founded the MIT Crypto Economics Lab and designed the MIT Digital Currency Research Study. He's also a faculty research fellow in the Productivity, Innovation and Entrepreneurship program at the NBER, National Bureau of Economic Research. Christian's research focuses on blockchain technology, cryptocurrencies, in many areas, and he previously worked on the economics of equity crowdfunding and startup growth, as well as economics of scientific collaboration. He holds a PhD from University of Toronto, Rotman School of Management, and a master's in economics and management of new technologies from Bocconi University in the beautiful city of Milan, Italy. Thank you very much, Christian, for joining us. It's a pleasure to host you.
It's a pleasure to be here and discuss these topics with all of you.
If you don't mind, could you explain the concept of Libra, the underlying technology for the uninitiated?
The very beginning of Libra was really about how do we take this technology that has a lot of promise but hasn't really delivered on it at the scale that we believed it could have, and how do we bring it and make it mainstream? How do we take some of the concepts pioneered by Satoshi, for example, in Bitcoin? How do we adapt them to the needs of unbanked and underbanked? Starting with a stable medium of exchange. One of the first few things that I did when I started thinking about the project was really ensuring that this could be a medium of exchange, not a speculative vehicle. Something that was kind of clear to me was that if we wanted to really help people, we shouldn't give them something that would change in value so rapidly. They needed something they could rely on, whether it's coming in as a remittance or for a domestic payment. And so the journey was one in understanding how do we blend the openness and competitiveness of permissionless networks with some of the needs of stability, financial stability, and also in delivering something that could really serve real people's needs and not just be, a speculative vehicle or something that traders are attracted to. Starting from there, there's a very long dialogue, of course, with a number of the engineers and others in really thinking through everything from the protocol design to the governance of the system to how do we actually bring this to market. I think there was a bit of a disconnect between how the crypto and tech crowd thinks about these issues and how regulators think about, of course, regulated financial services. And so in our maturing from kind of a young and kind of very bold, but also very naive project in white paper 1, we had all transitioned to the second version of the white paper, which was really the result of a long series of conversations and feedback and criticism we collected from regulators, policymakers, and a number of other stakeholders. So if you look at kind of the gap between white paper 1 and 2, in 2, it's clear that we cover a lot more about anti-money laundering, compliance, sanctions, all those issues that are really important in financial systems. We've also changed our vision for the assets. So at the beginning, we only had the multi-currency Libra. Now we've actually starting with the single currency stable coins and really working eventually together with central banks across the globe in enabling more and more of these digital currencies on the network. And then more broadly, also realizing that some of our aspirations of really transitioning the network to a fully permissionless one would have run into issues with compliance and really ensuring that we can fight financial crime. But we wanted to ensure that the system would be safe and also one that kind of keeps the bad actors out.
Currencies, as we have known them for quite some time now, they are held in reserve for financial stability of the entire system. A part of the worry with virtual currencies, at least in India, with certain segments of the society, is the question, will a reserve be maintained at all? How would you respond to this question? And if I may add, if a reserve is going to be maintained, where is it going to be maintained? Who will have access to it? So basically, on a macro level, do you think cryptocurrencies or digital currencies can become a viable instrument when we talk about monetary policy?
Well, I think there's a number of different types of projects, right? So there's projects that are completely untethered from any backing, like Bitcoin or Ethereum. The goal of those projects is not to tie to an asset that provides it value. It's actually to kind of find value intrinsically within the system. Then you have CBDCs. So there's a lot of experimentation now by central banks towards looking at how do we bring our current currencies and make them more digital, more programmable, more accessible. There's different discussions around kind of wholesale CBDCs, so CBDCs that would be distributed through the banking system, very much retaining the current structure. There's also additional proposal for how central banks could do this without going too much into the details of synthetic CBDCs, maybe even retail. Now, the retail ones are more problematic because it's very difficult for a central bank to interface directly with every citizen. And then you have stable coins, right? And stable coins also come in many different flavors, sizes, and instability. You have stable coins that are trying to build stability through algorithms. And there, often the collateral is over collateralized, so you'll need more collateral because there's some sort of stabilization mechanism. Some are purely based on expectations. If the ecosystem is growing and if your ecosystem is going well, that stablecoin will be stable. But if expectations turn, you can kind of generate what is a classic debt spiral. And then you have like the backed ones, the ones that are trying to really back this one-for-one with fiat. Libra is really breaking new ground in the quality of the backing. So Libra, for example, take a Libra dollar, will be backed one-for-one by 90 days or less US Treasuries. These are some of the most liquid and safe assets on the planet. And in fact, the reserve will not only be collateralized one-for-one, but will have additional collateral to essentially absorb potential losses due to credit risk. Think about the sovereign default, market risk, a shock in the interest rates, liquidity risk, think about a massive run on the reserve, and then operational risk. If something goes wrong, if funds are lost, do you have a buffer to kind of replenish the reserve? And those categories we didn't make up. Those categories are coming from the Basel III framework, which is the one that is usually applied to banks. So because of the payment system license application by FINMA that we're pursuing, we essentially are going through a process that looks a lot like the process a bank would go through when they're trying to launch. That gives us, a better design in terms of stability. And to your question about macro, really this is not meant to compete with fiat currencies. And in fact, if we were to remove the backing, that would immediately invalidate our payment system license, which is the license that will allow us to operate. And so our design is really one where we're essentially making some very hard commitments through the regulatory process to operate the reserve and to protect consumers in a very specific way. So that's really the goal of the Libra reserve. Over time, we also think about upgrading this and integrating it directly with the public sector. So, if there were ever in the next few years a digital dollar, we would stop operating such a reserve and integrate directly with the public sector. The goal is one where, right now you don't have central bank digital currency, so we have to build a reserve. But the goal is one to migrate to the public sector asset the moment it exists and it's available.
How can cryptocurrencies as a new form of exchange and the commerce can benefit India, and India could be representative of many other countries, not in participating and taking advantage of the so-called blockchain revolution?
So first of all, India is clearly one of the countries that I think will lead in this new wave of innovation. And part of it is because of the demographics, but part of it is also because I think there's been already tremendous progress in areas like payments with UPI, identity. And so those are really important components as you approach this space. Now, that said, like in many other regions, I think regulators are always worried about cryptocurrencies and blockchain in general. It's a technology that takes some time to fully understand. And it's a technology that often it's been deployed in a way that doesn't fit the mental framework of regulators. So my sense is that because of its entrepreneurial potential, because of this starting infrastructure in payments and in identity that's already very well established, India is going to be in a really good position to deliver on this. And a lot of it will be about new players coming in and really building services and products on new blockchains. Now, of course, some maybe are already accessible, some are not. With Libra, for example, we think for Libra to be able eventually to operate in India, it'd be fantastic to have a single currency stablecoin based on the rupee, because you do need kind of the domestic currency on the network to enable an array of domestic use cases. That could be the starting point. And of course, there's going to be many other networks on top of Libra. Now, of course, Libra, for example, could also support cross-border payments and remittances, which are important in some regions of India. So we think those components could be a good entry point for innovation in the area. But it's definitely a country that is in a really good position, I think, to lead when it comes to new startups, new ideas, and new services.
Despite the favorable decision of the court, the Central Bank of India still, I feel, needs to overcome its fear of misuse of these technologies due to very limited financial literacy in several parts of this massive country. So my question, Christian, is how would you allay these fears of misuse and potential problems around corruption?
No, I think, look, corruption, abuse of the system for money laundering, for terrorism financing, for financial crime in general are really real concerns, and I don't want to underestimate them. And to some extent, we don't have good data on how much of the current cryptocurrency ecosystem is used for those purposes. And it'd be great to have more information. It's just very hard to get, as you can imagine. I think the challenge here is one where some aspects of cryptocurrencies and blockchain have not come into sync again with some of the requirements of financial systems in general. Now, what's interesting is that the technology is very neutral. The technology can be implemented for good and for bad. And the way you regulate it, the way you shape institutions around the technology really determines, are you going to see more of the good or more of the bad? And so I think regulators have the right to be concerned. Now, the irony is that this is a technology that, when used properly, allows for a degree of transparency and traceability that's way higher than what you have with cash. Probably one of the best vehicles for corruption is a payment in cash. But you can build like a system like Libra in a way that when you're sending money, that information is collected in the right way, is exchanged between the regulated entities, and is available, for example, to a law enforcement agency under a court order, under the right framework. So I think I think it's important for regulators to understand, and even central banks, this prevents an array of opportunities. In a blockchain-based system with a CBDC, governments could get funding in the hands of their citizens instantaneously. And of course, again, UPI and other systems have made tremendous progress for something like that already. But if you build the right protections around it, starting from compliance and all of these other dimensions that really help you fight financial crime, I think you'll actually be able to improve on corruption, because you'll be able to have more information on exchanges under the proper uses. And so you'll encourage more of the good activity, more of the transparent activity, and you'll actually be really good at identifying bad actors, because now they'll behave very differently than the regular public.
If you get an opportunity to relay some recommendations to the policymaker, to the regulator in India, when it comes to the cryptocurrency ecosystem, which is already building up and becoming quite dynamic, what would those recommendations be?
So first of all, a reminder. I think you should see this as an opportunity. This is a sector that India can really thrive on and be a global leader. Not only because of the youth and the entrepreneurial talent, the technical talent that I think India has across a number of STEM sectors, but also the infrastructure you've already built, from UPI to identity. These are all building blocks, and maybe often it's tempting to think that that's enough. That's actually the public sector response to something like cryptocurrencies and blockchain. But cryptocurrencies and blockchains are going to be much broader than just payments. And so if you want the country to lead, if you want to enable all sort of new economic opportunities for the entrepreneurs in your regions, think about what is that framework. And of course, that framework can be, doesn't need to be relaxed. It can be a rigorous framework. It can be one that puts some really difficult requirements on ensuring that the system is safe, compliant, it doesn't facilitate things like corruption. But once you put those things in place and allow serious players to experiment, the one that do want to do this in a regulated way, I think you'll start seeing new type of infrastructure emerging, and you definitely want your entrepreneurs to have access to that. When it comes, for example, to the Libra project, we would love to work with regulators and policymakers in India to understand, is there a path for integrating the network with UPI, for bringing a single currency stablecoin, the rupee single currency stablecoins on the network, because we think that will enable a number of cross-border use cases and even new use cases domestically. We look forward to more dialogue with both entrepreneurs with ideas in India, with existing institutions, whether it's banks or telcos or others that are interested in building new types of payments and financial services, and of course with regulators to understand how do we adapt the technology so that it really works in your region.
Given this immense potential that the technology has going forward, and based on your own experience, would you like to highlight any pitfall that the young entrepreneurs, those who are aspiring to enter this technology space, you would want to advise them to stay clear of?
I would say, spend time learning everything that's happening in the permissionless crypto space, and then identify, is there any technology being developed here that can solve a real problem? Identify that problem and start from the pain point and work backwards to, how do I use this clever new technology to solve that problem? And I think if you do that process and you ensure that you build something that is robust, that really serves people, and it's stable, relative to the goal you're trying to achieve, by focusing on that, I think they will make a lot of progress. I think sometimes entrepreneurs try to just throw something out, which can be great. I mean, you can get very lucky and identify a real problem. But I think, like in any other setting, it's really important to start from, what is a pain point? What are we trying to achieve here? And what bits of this technology are really unique at solving this? I would say that probably the biggest pitfall is to just, you want to use the technology, you want to use crypto or some flavor of blockchain, and you apply it to a problem that does not really need a blockchain or any sort of cryptocurrency application. And that's terrible, right? Because then a centralized system or a database would be way more effective and efficient. So think about, what is the problem? Think if you need blockchain or cryptocurrency to solve it. And also in general, often there's really good opportunities on the periphery of the ecosystem, because and we discussed this, for example, in an HBR piece with Catherine Tucker, the technology is not really good at converting information that is offline and not digital into online. And so often last mile solution can be a really big complement to blockchain. And for blockchain actually to thrive, you need those last mile solutions that can be extremely valuable. Think about issues around know your customer, KYC, and ensuring that the person that's claiming to be someone on the network is actually that person. Focus on some of the more boring problems, because there might be some really big entrepreneurial opportunities there.
Do you think it's a challenge for those who are graduating with a finance or economics degree to get into the cryptocurrency space as entrepreneurs or developers?
Absolutely not. And in fact, they just have to do the same exercise that I would recommend to the computer scientists, which is the computer scientists have to learn economics and finance. And, our graduates from all sort of programs in economics and finance need to learn more computer science. And it's not because I'm expecting them to write code. I think it's just so that they can have a conversation with their technical engineering team and understand what are the trade-offs. I think in today's world, when you look at innovations like the one in blockchain and cryptocurrencies, they're really at the intersection of multiple sectors. I would add actually legal to really advance this space. You typically, if you think about a startup, right? And Libra, of course, is a bit of a special startup. But if you think about a startup, you would need a really good lawyer, someone that understands the legal frameworks, the constraints of your country or the regions you want to operate in. You would need, of course, really good engineering talent with a distributed systems, cryptography background. And then you'll need someone with an economics or finance background. When you blend those three together, you typically are in a really good spot for actually making progress in this space. If you lack any one of those, of course, you should still get started, but also realize that often to get your project off the ground, you will need at least all three. They're all critical because without legal understanding, you'll end up building something that the regulators will not gonna like or that can't operate. Maybe you'll operate for a while, you'll even be successful, and then you get blocked. Without engineering talent, I think eventually you build something that's inferior to what can be done with today's technology. And without economics and finance background, I think you'll lack that understanding of how do we design the incentives. I mean, at the end, blockchain is all about new forms of market design, new ways of designing incentives. You risk, building something that won't be able to scale because it has it's driving participants in the wrong direction.